All right. Hey, everyone. Mark here, Mark P Markets. Thanks for joining me. Let me just adjust my microphone real quick to make sure everyone can hear me okay. All right. I'll have the screen up in a moment. I want to welcome you all. Thank you for joining me for my stream. For those that are new, this is how it works. So first, I'm going to briefly mention the economic calendar, which you should all be familiar with. Then I'm going to run through the Bitcoin analysis. Some people think that the entire stream is going to be about Bitcoin. No, there's going to be the beginning portion of the Bitcoin analysis. That's going to be about maybe 5 to 10 minutes. And then after that, I'm going to answer your questions about stocks or altcoins or any other market that you'd like me to evaluate for you. So right now would be a good time for you to put your questions in the channel. Okay, hold on. I am simulcasting, so let me just make sure I have my people over here. Hey, Stian, I see you over there on TradingView. Cool. Let me just see what's going on over there. By the way, people, if you are following me or listening to me on TradingView, sometimes there may be some problems with the stream. If you can't see the screen, just make sure you refresh the browser, and that usually solves the problem. Okay, so with that being said, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Okay, let me just remove this slide because you all get the message. Okay, hold on a second here. I'm going to take that away. Okay, cool. And you guys should see me. Hey, everyone. All right, now, also real quick, if you'd like to mention what country or what city you are from, that's always a fun fact. Now, real quick, before I get into the analysis, I just have to mention one thing here. This stream is brought to you by 8Cap Partners. Okay, they make this possible. If you're not familiar with them, they are an Australian-based and regulated Forex and CFD broker. They offer very competitive spreads. They also have a commission-based model, or they have their standard model. What makes them special is not only they're competitive with their spreads, but also they have a lot of products that you can trade through their CFD offerings. Okay, you can trade Bitcoin, you can trade a number of altcoins. I believe they have up to 300 of them. And another nice feature, they recently integrated with TradingView. They are a TradingView broker partner. Okay, so what that means is you can trade your account through TradingView, which is a very convenient feature because they use their basic platform as MetaTrader, which, you know, if you're a beginner, it's okay. But the thing is, it's not flexible. Okay, TradingView is extremely flexible, and you can do so many things with it. So obviously, I'm a big proponent of TradingView. So if you can trade through TradingView, I believe that that's a very, very helpful thing because of the way you can customize your information. Okay, anyway, so with that being said, if you're interested in 8Cap Partners, let me know. There is a special with my training program. You can find it in the descriptive portion. Let me know if you're interested in that, and I can help you further. By the way, it's only available to non-US residents and people that are not on the restricted list, countries that are not on the restricted list or sanctioned list. There's a whole list of countries on there. So if you're from one of those countries, they're not going to open your account. Okay, so just want to make that clear. And again, non-US. All right, let's get into this here. So first things first, I have to mention that the economic calendar, there's only two things worth mentioning this week. Okay, the first one is on the 28th. We have Chairman Powell speaking. All right, that's very important. And then on the 29th, which I believe is Thursday, we have GDP. Now, the GDP number for the US, these are both US reports. The GDP number, that's a lagging piece of information. So it's expected. I wouldn't really expect the market to move unless there's some really dramatic surprise there. But the key piece of information this week is going to be Chairman Powell. Now, the week before, he had the FOMC meeting and he came out with very hawkish comments. Okay, and the market has basically sold off since then. If you look at the S&P and NASDAQ and all that other stuff, bonds have also pushed new lows. Now, so the market's going to be looking for hints from him. All right. So here's the thing. Don't use logic in this situation, and don't try to take trades based on what you think he's going to say or what you think. The market doesn't care what you think. When he speaks, it's going to be like this. If he says something more hawkish than expected, you're probably going to see selling activity, following Thursday and Friday or whatever. If he says something less hawkish, it may still be hawkish, but less hawkish, then you will probably see buying activity. The idea here is not to sit there and apply logic to what he says. Let the market figure it out. Especially if you're a day trader, let the price patterns, let the structure, let that speak to you, okay? Let that give you the idea of what the market thinks, and then you can adjust from there. This is also important because if you have any trades going into that speech, it gives you an opportunity to manage your risk, meaning maybe you take something off the table, maybe you tighten your stop. That's going to depend on where you are in that situation. Okay, so those are the main news items to pay attention to this week. There are other things on the calendar, but that's really like the focus. All right. Now, all right, so that's the economic calendar. By the way, this stream is only going to be an hour. I'm going to cut it off at an hour. If I miss your question, I apologize. Come back next Monday and you can ask me again, or you can find me through email or some other way, and I'll be happy to answer your question. But after 1 hour, I will conclude this stream. All right. And all right, so let's continue now with the Bitcoin analysis, right? That's what we're all here for. So first things first, if you read my article yesterday on TradingView, I know many of you have read it. I talked about basically a new sell signal potentially developing. You have to understand something. This is the 8-cap chart. Some other charts may look slightly, there's some variations of this. We noticed, Bill and I noticed it earlier today when we were looking at one of the other feeds on here. But this right here, right, it can be very confusing for people, because if you look at this each candle, you're like, oh, well, this candle must mean this. It means nothing. You know why? Because they're all inside broader ranges here, and that's what matters. So these are the candles. I'm going to highlight them right here. These two, basically this large pin bar, and then you have this green pin bar over here. Those are the only things that really matter here. And we are inside those ranges. You see that? I want to make it nice and big so you can see. We are inside those candles. As long as price gyrates inside there, I mean, a lot of things can happen here. It's highly random. And we have a nice catalyst coming out on Wednesday. Chairman Powell, he can move this market one way or the other. This thing has a tendency to be affected by the S&P. All right, it's not one-to-one, but if the S&P sells off and starts pushing 3650, 36 even, 3550, this will probably break lower. All right, that's what I would be anticipating. I don't short Bitcoin, by the way. I'm interested in other markets to short, but I am open to calling the idea. Now, so the point is, if this thing breaks 18,500, if this thing closes below that, you have a new continuation pattern, a swing trade sell signal, okay? Now, at the same time, if this thing takes out 19,500, you will have a buy signal. Now, that can be very confusing. In fact, the other day, I sent out a potential idea based on this pin bar, which never actually went into effect, okay? And then I since have canceled the order. But I actually called for an aggressive long. If this 19.5 was cleared, which it was not, never even touched the order that I put out, because this can also turn into an aggressive swing trade long, which you'd be looking to capitalize on the short squeeze. Now, let me keep you realistic about that. If there is some kind of bullish signal here, right, which is very possible, you're going to see a lot of big mouths and a lot of novices and a lot of fake gurus who are just looking for attention and trying to push affiliate links, right, like we all are. They're going to be calling for some ridiculous numbers to get your attention. Bitcoin's going to 30K. Bitcoin's going to 50K. There's no way to know. First of all, those numbers, those ranges are not reasonable right now. Is 40K possible? Yeah, maybe in 6 months, but there's no way to know. So much can change, okay, fundamentally. So you can't make those type of forecasts right now realistically. So what are the numbers that are in range? 17K is in range, 14K is in range, and on the bullish side, right now, we're looking at 20, 21, like these areas here, right? Your first resistance on this thing, if this thing starts to rally, you're looking at this area right here. Okay, what price is that? That's 20,376. You could round that to 20,500. Okay, that's going to be a minor resistance. It's based on this price action back here. Okay, if it clears that, then you're looking at this zone in here. All right, this zone. Now, here's the way to play this. If you're interested in an aggressive swing trade long, this is what you should be expecting at the most optimistic levels, okay? Most optimistic. So if you think this thing is running to 28K for some ridiculous reason, you're taking a lot of risk, okay? The larger structure, all right, which is nothing but respected resistance levels, and the economic environment both favor respect of resistance levels and break of support levels. That is what the environment supports. So you're going against that if you think otherwise, okay? And basically, if you have some kind of opinion, think, oh yeah, Bitcoin's going to go to 50K. You'll see in 6 months. Well, now you're implying that you know more than the market, okay? Unless you have inside information, there's no way to know. So I like to work with the structure. The structure tells me how I should gauge my probabilities. Probabilities favor lower prices, even though on the short term, we can see a squeeze. Don't be confused by the squeeze, okay? Now, so if it squeezes and you're not in it, then I would be looking for the short in this area here to see if you get a sell signal in that area. That would be another lower high, and this resistance here will be respected, okay? And then that gives you a higher probability and a better reward risk for a, if the market can test 20K or 19 or 18K again, whatever, if it comes off of 21, you have a couple of thousand points of potential for, maybe a 1,500 points of risk, something like that. All right, maybe 3,000 point potential, 2,000 point risk. That's within reason for a swing trade. All right, so that's what you're looking for as far as the short. That's one short scenario. That's the conservative one. This can take the entire week to play out. So either you're looking for the aggressive long, right, which is the break of 19,500. Now, keep in mind, it can fake out. All right, if there's a fake out and you're stuck in that and it takes out 18.5 after you're long from 19.5, now your buy signal turned into a sell signal, right? And that calls for attention, right? Either you get out, take the loss, do something, take a smaller, lighten up your position, whatever, tighten your stop, because the trade is then the long idea at that point is negated. Does that make sense? So that brings me to the short scenario, the aggressive short scenario. You take out 18.5, okay? Actually, I think it's the low here. What is this? 18.1. You take out 18.5, this thing starts pushing below 18. That's the aggressive short. Why is that aggressive? Well, you're on the right side of the general structure, but you're selling into some pretty significant support levels, okay? Going back here a bit, I mean, the lowest point was that 17K area. This is the zone you're selling into, okay? See this zone? You're selling into that. So while you can get a momentum continuation pattern, and it can follow through if there's a powerful enough catalyst behind it, it can fake out and quickly. Have you seen the British pound? It can do something like that. And you don't want to be caught from the bottom of something like that. If you haven't seen the British pound, take a look at it, okay? You don't want to get caught on the bottom of something like that. Even though everything points bearish, you can have a short squeeze, and this is a great location for such an event to happen, okay? So keep that in mind. I'm open to calling an aggressive long. If I see a clear signal, I'm open to the idea, okay? You have to be flexible. You have to look at both sides of the market at all times, and then depends on what kind of risk you're willing to take. I'm open to taking, I only take longs in Bitcoin, so I'm more likely to take that trade. I will not take the short trade. Does that make sense? I have plenty of other markets that I can get short. I'm not comfortable shorting Bitcoin. People always ask me, but I just don't short it, okay? Anyway, so that's Bitcoin. I hope that answers, a lot of your questions. I hope that gives you some good perspective on what to anticipate as this week unfolds. Again, the big event could be Powell. All right, we don't know. We have to see. But Bitcoin is in a position to go either way. All right, let me go into your questions now. Let me see what people are asking me. Let me say hello to everyone. So we have Steen. It's always good to see you. My students here. I got Wei, I got Bill, Alex. Hey, I got my Romanians. Mr. Plow, good to see you. Winter, all right, another Romanian. Hey, Daryl, good to see you. Sean, good to see you. All right, Daryl. Let me see. Levent. Okay, Daniel, good to see you all. Okay. Let me see who else we got here on TradingView. I'm going to say my hellos, and then I'm going to start looking at your questions. Yeah, Peter. All right, good to see you. Sajin, Beni. All right, Nader. Good to see you all. All right, so let's get into your questions here now. I'm going to start here on the YouTube side. So we got here Mr. Plow, Bitcoin on Bitfinex with quite large volume today. All right, so be careful with the volume statistics. Yeah, there's some truth to volume, but you have to be careful. All it means really is there's a lot of people taking, this is basically a two-side market, right? You have a lot of shorts and a lot of longs opening up here. That's typical of a consolidation, right? Like the volume surge. Where that becomes significant is when the market breaks out, because if it breaks out one way or the other, half of that population is wrong. So that half is now going to be on the side that pushes the market further. So for example, if you have a lot of shorts in this thing, right, they're all betting on the short side, and this thing squeezes, they all have to start buying, excuse me, to cover, and they create more buying, right? Same on the other side. If this thing breaks, all those longs are going to start banging it out. They're going to get margined out, all that other stuff, and they're going to create more selling pressure. That's really all where that becomes significant. Other than that, you can't really, the volume is not going to help you figure out what side it's going to break. The market will move on information, okay, as it comes to the market. And the overall structure, probability, right, of the structure, we have lower highs, all that other stuff, S&P weak, all that, bonds continuing to push lows generally, that favors a bearish break. That's how you have to look at it. Don't know if we will get the bearish break, but that's where, if you're going to bet on probability, that's what it points to right now. It can change, but that's what it points to. Okay, good question. All right, let me see what else we got here. Can you do on gold? Sure, Daryl, gold. So gold has been very interesting. Before I get into gold, let me show you this, because whenever you deal with gold, you have to look at this. You have to look at the dollar index. All right. Now, earlier, Bill, right? Remember this earlier, Bill? The dollar index was showing us a pin bar earlier. All right. This doesn't look like a pin bar anymore. So there was like a potential high developing in the dollar, but not anymore. The dollar is at 114.03. This thing is on its highs. The dollar has not been this high, the dollar index, in a really long time. This puts a lot of bearish pressure on everything. This is also a reflection of interest rates. This can also be smart money anticipating Powell's comments, okay? Because there are people that know what he's going to say before he says it, and, that's how things work. It works like that. So now here's the thing. With dollar being that strong, no pin bar, let's take a look at gold. So here's gold, right? No surprise here. Bill, remember the chart? There was a bullish pin bar developing in the dollar. And if you remember what I said if I get the bullish pin bar, I would be open to a swing trade long, aggressive, just like the Bitcoin situation. Okay, very similar. I'd be open to the swing trade long idea, but the pin bar is no longer in existence. As you can see here, the pin bar vanished, and it's now a red candle again. That's why you can't make judgments too early. You have to wait until the candle closes. If I was all reactionary and all emotional and all that other nonsense that you get from the fake gurus, I would have gotten long just on the brief visual of the pin bar. Oh yeah, there's a pin bar there. It's going to close like that. Trust me, I know these things. Right. Where's the pin bar now? So no long. Okay. What's the price of gold right now? 1626. There's no reason to go long gold. There's been some talk, now is a good time to invest in gold and blah, 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 blah. Yeah, gold's certainly at low prices, but you're fighting the Fed, okay? Gold can go to 1550 if it wants to. That's not that far from here. And you're fighting a very strong Fed, a very strong dollar. So there's nothing to do in gold as far as longs go. If you're interested in investing, use something like Newmont Mining as a gauge. Look, Newmont is about to break its support, or it's actually broken the support. So if you're going to invest in gold long term, stocks like Newmont Mining, but small shares. I keep saying small shares. If Newmont, what's the price of this thing? $40. What if it goes to $30 over the next few months? You don't want to be big in these things. There's no reason for these things to rally fundamentally, none. Okay, doesn't matter if they're low, they can go lower. So long term, that's not a bad idea. Another thing, if you're into the physical metals, you buy yourself, you set yourself a schedule once a month. You buy yourself whatever coins. I know coins are going to have a high premium, the mint premium, but coins, bars, whatever it is that you're buying, you just accumulate small because you're getting it cheap. Keep in mind, the reversal in gold is going to require a reversal in the dollar. Gold is not going to just reverse on its own because it's too low, because there's no gold in Fort Knox and all the other nonsensical conspiracy theories. Okay, gold will reverse when the dollar reverses and the Fed stops being so hawkish. Okay, so if you have a problem with that, go contact Chairman Powell and tell him you don't like what he's doing. All right, so the point is, gold is not this is not a good time to be generally buying gold. As far as shorting go, what about the short side? Well, it's on its lows. So if you're not short this, there's nothing to do. You just have to wait for the next resistance. There's no resistance here. This is going to develop a support at some point. So what you want to see in gold is some sort of bounce. Okay, I mean, like I said before, I was considering going long the bounce, but there's no bounce right now. So if if I miss the long, the next thing I would be looking for as far as swing trades is a short somewhere in here. All right, because that's a resistance level. That's a recent resistance. That's around 1700 area. And that can give you a good location, a high probability location for the next short. But are you going to short gold stocks? Probably not. Bad idea. Consider the CFD for such a short-term idea. I mean, typical swing trade, looking at a couple of days, couple of weeks maybe. That's it. All right. So understand how to use these instruments. I hope that answers your question about gold. And silver is in the same boat. Someone asked me about silver over the previous week. Silver has an interesting chart, and it was acting sort of relatively strong. But with the gold like this, I mean, let's just take a quick look at the silver chart. XAG. Silver is also a tough trade. Look at that. It's giving it back. All that nonsense. There's a shortage of silver, and the commercial hedgers. Don't fight the dollar. I don't care what conspiracy theory you come up with. The dollar's on new highs. This is how silver should be behaving. Okay, so it's the same deal as gold. All right, so let's move on here. Good question. Let me move on to the trading view chat. All right, I've been ignoring you guys here. I'm sorry about that. Let me see what we have over here. So let me go back. Okay, I never had an issue. Oh, okay, thanks, Stian. Thanks for letting me know. What are your thoughts on ZN1? Oh, okay, good question. So ZN1, those are the bond year, 10-year note futures, ZN1. I look at these every day. Oof, look at that. Bill, remember earlier? Okay, so I look at these every day, all right? I don't trade these, but these are a very important economic piece of information. So ever since the bonds broke these lows, I mean, I was saying there's no reason to be in stocks. There's just no reason. Rates are rising. Look at this nasty candle. All right. Earlier today, it was trying to put like a little bounce together, and you have a pin bar from Friday. But as you can see, no bounce, right? Again, can't go into this game with opinions. Let's just take a quick look at the weekly chart. Look at that. That is rough. Okay. Look at that. This is weekly. Rates obviously are rising. Bonds are filled with smart money. So they are the people that know something. They just know how things work, okay, or they have inside information. Typically, bonds are, people that are involved in bonds are typically hedge funds, fund managers. You get what I'm saying. So the bonds close like that. Yeah, maybe there'll be a bounce at some point, but man, it hasn't started yet. And the party starts in the bonds or not. So money is getting more expensive. That's what that says. So what's the low today? It's almost breaking into the 110s. Okay. I mean, the bonds have not been this low in quite some time. Let's just go back here. Look at this. This is going back to 2014. Look at this. This is 2014 back here. You see this? Look how much lower we are. All right, rates are going through the roof, basically. So that means, again, as money becomes more expensive, it puts bearish pressure on everything. Bad time to be investing in stocks, generally, like I keep telling people. That's what this tells me. So, you want to be investing in stocks, small bites, just like the same deal like with gold, small bites. The S&P can go to 3,000. All right, it's possible. And you don't want to get caught with a large position in Apple because Apple can't go much lower. That's usually like how much lower can Apple go? It can go lower. Okay, it's not going to go to zero, but it can go lower. So why go in big and take bigger risk when the market just keeps saying there's more risk, right? It's not changing yet. All right, does that make sense? So anyway, thanks for bringing up the bonds. You all should be paying attention to this chart every single day. Okay. And by the way, when the bond market turns, it's not one-to-one with the stock market. It's going to take, at this rate, it's going to take a couple of months before the bonds can show us anything meaningful in terms of stock market changing. Make sure you understand that. A couple of months, okay? Months, not a couple of days, not a couple of green candles, a few months. You're going to have to be patient with the bonds, all right? So anyway, that's the bond market. Thanks for asking. Hey, Beni from New Zealand. All right, welcome. Don't think BTC will try to move toward short term? Don't you think? Okay, though it seems, okay, no. Okay, so good question, Beni. I don't think. The market tells me, okay? The market decides. I don't have opinions. I don't think. I go by levels. Now, as the market pushes lows or whatever it's doing, that's a piece of information. If the market reverses and starts pushing a resistance, I want to see, does it break the resistance? If it does, that's a new piece of information. And then I make an adjustment. I don't think. The market thinks for me, okay? Because I don't know better than the market. That's one of the biggest mistakes novices make, and also a lot of fake gurus. They think they know better than the market. I don't, okay? The market always knows more than me. I respect the market. So I let the market tell me. If I'm confused, I wait until the market gets clearer, and that's when I start formulating, right? But when I actually think, all I'm thinking of is risk. How much risk do I have to take if there's a signal here? Do I want to take that risk? That's the thinking that I do. I don't think, whoa, I think Bitcoin is going to go here now. I don't think that. All right, anyway, good question. And that's the way you have to be. You have to have a very open mind, especially when you're on the smaller time frames. Okay. Nader, hey, good to see you. Okay. Oh, no problem. No problem. All right. Well, I answered it for other people then. Dollar is to a yearly resistance of 116. All right. So like I said, the dollar, earlier today, the dollar index was basically trying to show it's like a reversal, right? Like a momentum reversal, and now it's gone. So it's vertical. I mean, this thing looks like an altcoin. So here's the way I treat the dollar. Stay out of its way, okay? Basically, you're fighting the Federal Reserve. At some point, it will pull back, okay? And I'm looking at the levels. This is the pullback level right here. All right, that's the place to be looking for a pullback to. Excuse me, I'm sorry. 110.78, right? So that area right there would be a place to be looking for potential trade ideas. I don't know when it will pull back there or if it will make it that far back, okay? But that's a reference point for the future. That's it. That's all I can do with this. Otherwise, I'm staying out of its way. I'm not going to sit there and think, well, the dollar's too high. It has to pull back, right? That's a very big mistake. It can do whatever it wants to do. So like I said before, you don't want to be buying the top of the dollar, and you don't want to sell into this just mindlessly thinking because it's too high, right? That's just a nonsense opinion that the market doesn't care about. So just stay out of its way and let it find its resistance, let it put in a reversal, and that can give us some potential aggressive swing trades long in markets against the dollar, like gold, like the euro, okay, like the pound, markets like that. And that's where I'd be looking for the aggressive reversal, for a potential swing trade. If you could make with a swing trade, a counter trend swing trade, I'd be looking for 150 to 200 pips, something like that on this type of reversal, but no more than that, because again, we'd be fighting the broader trend and the general market context. You don't want to be on that, the wrong side of that. Okay. Because you may not, I'm saying, I would like to get 200 pips. The market may not deliver that. The market may only deliver 85 pips and then turn. Okay, so if you sit there and say, well, I'm staying in it until I get my 200 pips because I know better, you're asking for a lot of trouble. Okay, does that make sense? You're better off thinking aggressively like that or expecting more on the short side until the market changes its story. All right, so good question, or thanks for the observation. All right, let me jump over here. Oh, so I got from Elias, I got SPX. Okay, I'll go over the SPX. It's one of my, that's a market that I'm very closely involved with. Let me see. Let me just go over to the other chat here real quick. All right, so I conducted gold. All right, hey Sean. Okay, oh, from Colorado. All right, cool. Welcome. Alex, amazed BTC resisted this well. Yeah, it's unusual, right? But accept it for what it is. Oh, who sent me that? Visionary. Yeah, thank you for the 100 coins, Visionary. I appreciate that. Oh, you have a question, and I'll get to it. I appreciate that. You don't have to send me 100 coins. What you can do is, you can press the boost button on TradingView. You can press the like button on YouTube. That helps. Increase the viewership of these videos. That would be helpful. Thank you for the coins, though. I really appreciate that. Thank you. You don't have to do that. It's very generous of you. And I will get to your question. Okay. But yeah, sometimes you get these unusual behaviors, right? Where Bitcoin should have basically pushed those lows and then somehow it finds a support. Don't try to explain it. Just accept it, right? But meanwhile, if the S&P keeps pushing those lows, it's just going to mount pressure on Bitcoin. So for me, I would just take that as there's less and less potential. Now, on the other side of that, we can argue that Bitcoin is acting relatively strong. We can, but it's going to take a long time before we can count on a trend reversal. Maybe we see a short-term short squeeze up to like 21K or something, but I wouldn't be expecting much more than that. Not until we see, you see those interest rates, we see this dollar, Bitcoin's not going very far, okay? And neither are the garbage altcoins. All right, let me see what else we got here. Levant from Turkey. Hey, welcome. Thank you. Oh, no problem, Levant. Thank you for stopping by and listening. I appreciate you being here. Daniel, do you follow any lithium? I don't specifically. Are you referring to lithium? Are you referring to those battery stocks for EVs and all that stuff? If you have a stock you'd like to see, let me know. We'll take a look at the symbol because look, all stocks generally, it's all about structures and levels. Fundamentals can play some role, but it depends, right? It depends what kind of business they're involved in and how interest rates can affect that business. That's the first thing I look at. If they're a very heavy business that carries a lot of debt, they're going to have a hard time in this environment. Okay, for example. But all stocks will suffer, and growth stocks and penny stocks and highly speculative stocks are going to suffer more, okay? Because they're the ones that need the most money. All right, hey, Scott, good to see you. Visionary, all right, cool. It's good to see you too. Thank you again for the coins. All right, what if recession is official? Will that be bullish? Because the Fed will have to take it more easy. Well, I think, look, if you look at the interest rates, let me just put another chart on here because it's boring looking at the dollar here. Interest rates are, if you look at the 2-year and 10-year, they are inverted, okay? We have an inverted yield curve. So, that is clearly recessionary. So the market knows, right? So if GDP comes out and says officially we're in a recession, I don't think we're going to get much of a reaction out of that, or that they anticipate that the Fed's going to take the foot off the gas, because the Fed knows, right? They look at that bond inversion, so they know, right? So that's why I wouldn't really make a big deal out of that. Now, I could be wrong. The market may start to think otherwise. If the market starts pricing in, Fed is going to have to cool off on that stuff because officially we're in a recession, then you'll see it in the price action. But right now, bonds seem to not care, right? Bonds are on their lows, right? Rates are still rising, so we have to see. Anyway, good question. Hey, Kai, good to see you. How are you? All right. Okay, Alex. All right, cool. Thanks for sharing. Let me jump over to the other chat here. Let me see. Let me see what other questions we got here. All right. Hey, Freeloader, good to see you. Okay, so SPX. All right, from Greece. Elias is from Greece. All right, welcome. Good to see you. All right, so SPX USD. All right, we look at this. So look at this. All right, so earlier, see, I have a meeting every day early, and we look at the market at the open. And earlier, the S&P was trying to rally, right? It was trying, but as we know, the close of the day can be a completely other story. Well, here's the story, right? Now we have our answer. This is not a pretty candle, all right? It's an inside bar. Now, what this is setting up for is a swing trade. It's setting up for an aggressive sell signal. It's a continuation pattern, but very similar to the Bitcoin levels. Look where the S&P is, okay? These levels back here, these are what the June lows, these are significant, and the market can see that, right? Those levels have a memory. So as you can see, these candles have tails on them, right? And maybe those are early, the early buyers stepping in, thinking, yeah, it's going to bounce, okay? And they're taking a lot of risk by doing that. Now, so this means a couple of things. And also, a lot of this is going to depend on what type of strategy you employ. If you're a day trader, you're not going to use this information the same way as if you're a swing trader. So as a swing trader, this is not a good place to be going short. You're taking a lot of risk. This thing can easily squeeze. We're going right into Chairman Powell's speech on Wednesday. Okay, he may say something hawkish. Who knows? Dovish. This thing is in a position. It's in a good location to reverse. We have no evidence of a reversal, but it can reverse. If it reverses, you will see a sharp rally. Okay, this thing can work its way back up to 4,000. It can do it. It's possible. Or into the mid 39s. It's very possible. In that situation, if you're like intraday, you would be looking for longs as the bullish momentum follows through. You'd be looking for continuation patterns. But right now, you have to assume that this momentum is going to stay intact until we have evidence otherwise. So there's an inside bar. If the inside bar closes, right, it closes like this, the market's going to close in 20 minutes. If this thing closes like this, and tomorrow this low, 36.44, is taken out, the number may be slightly off because I'm looking at the CFD, but if that number is taken out, you're going to see a lower low, right? So intraday, obviously, you're going to be looking for shorts. You're going to be looking for short momentum to continue. As a swing trader, it's an aggressive short because, again, you're taking a lot of risk from this location, right? So you have to have a tighter stop. You have to be quick to get out if you get a conflicting signal. This is a great thing for options. If you know how to trade options, vertical spreads would be great right here because that keeps your risk fixed in case there's a very wide range expansion, right? You don't have to worry about getting stopped out and all that other stuff. That's the way I would play that on the long side, right? And it also allows you to step in because you have that risk control. Of course, you'd have to know what time durations and stuff like that. You'd have to be familiar with that. I'm not going to explain all that here. But the point is, you'd be looking for some sort of run back up to that 4,000 level. It may not make it there, okay, over the next few days. It may only get halfway and then give us a new sell signal. That next sell signal off of this location, okay, again, we're looking at all these levels here, right? All this price action back here, this area right here. These are areas where you can get sell signals that would basically develop into a lower high, potentially, right? You can't go into it thinking it will. You have to wait for the confirmation. And if you get that, that's the ideal place for a swing trade if it can produce that. Otherwise, maybe it produces a smaller lower high. You have to let the market answer that question. We cannot know in advance. All you know is from the low to this area would be a good area for a potential short if you can get the signal. All right. Of course, at that point too, you'd have to measure your risk and see what kind of risk the market is showing you. And then you have to decide if that risk is acceptable or not. All right. But right now, if you short the break of this, maybe you get that momentum follow through, but you have to babysit it. Be careful because if you get the conflicting signal, that squeeze can be harsh and you don't want to be caught from the bottom of that. That's one of the big risks with these momentum continuation patterns. But obviously when they work, this was a momentum continuation pattern back here too. These pin bars, okay? Inside bar, break. This was just the same risky situation, but it followed through, okay? So maybe you get something like that again, but obviously the lower it goes, you may get stuck in one of these situations, right? You don't want to get caught in this. So that's basically the outlook on the S&P. If the market rallies, okay, and you do get the squeeze, if the market rallies, a lot of stocks, they're going to say, buy this, buy that, buy this, buy that. This is not a buying environment. It's going to take a long time before this becomes an environment to feel comfortable about investing. So please don't get sucked into that nonsense. There's so much talk of it. It's unbelievable that people still believe it. But you know what? People are irrational, and they love to believe in hope. They love to consume hope, and then when someone says, well, you better buy it now, otherwise you will miss the bottom of all bottoms. And then of course they're instilling the fear of missing out. And then you go ahead, next thing you know, you have 200 shares of Apple at a bad price. Okay. So please understand that's going to take some time. Even if the bottom puts itself in, you don't have to catch the bottom, because trying to play that game can be very expensive. How many bottoms have people called so far? Okay. When the market truly bottoms, we're likely to see a range, and there will be continuation patterns. There'll be plenty of opportunity to get in. So there's no reason to be in a rush. I just want to make that clear, all right, when it comes to the S&P. All right, so is that clear? Let me know if you have any more questions. I could talk about the S&P for hours. All right, next question. That was the S&P. Okay, so hey, Jamesy from London. Hey, dear. Do you have any views on why BTC is well above the June low? No, I have no idea. Good question. I don't know why it's above. It could just be lack of activity. It could be complacency. It could be, anything. It doesn't matter why. All right. Don't ask why. It doesn't matter. All that matters is that it is, and that it can break one way or the other. But with the S&P looking like this, and the S&P likely to push lower, right? If we break that low, that June low on the S&P, it's going to keep putting pressure on Bitcoin. Okay. So maybe Bitcoin is acting relatively strong, right? But don't be fooled by it, because right now, there's a lot of indecision going in, right? Again, we're going to that Powell speech. Volume will probably get smaller and smaller going into Wednesday until the guy comes out and starts talking. Right. So just keep that in mind. Don't ask why, ask where. Wait for the break. I gave you the scenarios. Good question. Okay. Thoughts on semiconductor stocks as TXN? Sure. Let's take a look. Now, first things first, semiconductor stocks typically follow the NASDAQ. Oh, yeah, the NASDAQ follows the S&P. So let's take a look. These are usually market stocks. Okay. This is Texas Instruments. There's other popular ones, Intel, Taiwan Semiconductor, right? NVIDIA is another one. They typically follow the market. Okay, now they could be acting relatively strong or relatively weak. Let's look at a weekly chart of this thing. And, so the S&P is basically on its low, and this thing is not. So that right there is a sign of relative strength. This thing is not taking as much pain as the S&P, right? It doesn't matter why. It's just, that's the fact that you have to realize. So here's the thing. As far as swing trades go, you have an inside bar, and this is a potential support area, right? Based on these levels back here. But the thing is, this is the middle of a range, right? This is the range, the low to that high. That's the range, and that's sort of the midpoint, slightly lower than the midpoint. It's a potential area for a swing trade long, but it's also going to be highly random, and you're generally fighting the market, even though it's acting relatively strong. So if you take any longs on this, you have to understand that it's probably going to be limited. So your profit target areas should be considered up in this area right here, which is around 171.5. What's this thing at one? So you're looking at about maybe 10-point potential. But overall, you're fighting a pretty weak market, right? And if the market keeps going lower and lower, this will turn into a bearish continuation pattern, most likely, right? And it can take you into the lower part of the range. It can take you here. For whatever reason, it's just acting relatively strong now, but it doesn't mean that relationship will stay intact, okay? Especially if rates keep rising, these stocks they're usually debt heavy, a lot of these stocks. Tech stocks usually feel a lot of pain in that environment. So the environment's not with you, okay? So just something to keep in mind. If you're looking at this from the investment perspective, again, pay more attention to the environment. Small bites only. I'm going to say that about every stock. Small bites only. We're not in a supportive environment. Now, if we look at the smaller time frame here, right, the daily time frame, you have the bullish pin bar, failed low, and there's a buy signal active right now. So 161.83 was actually the entry. This thing's at 161.36. It's actually below the buy signal entry, which is based on this pin bar. So you have that. So again, if you're interested in that swing trade, it's interesting. And if the market rallies, since this thing has been acting relatively strong, like if there's a squeeze in the S&P, then that's going to be good for this thing, right? I'd be looking for these levels first. The 170 area should be very reasonable to reach, in a few days if you get that rally from the S&P. If you don't, then this thing will probably fool around and break that low. Okay, so just something to keep in mind. Now, so bigger picture, you have this bullish structure, right? But smaller picture, right? Shorter time horizon here, you see we have a lower high. Okay, we have these lower highs and it's trying to push that low. So don't lose sight of that momentum. That's what I can say about that. So you always have to look, there's a lot of moving parts here. You have to look at that S&P or NASDAQ. I mean, they're basically the same thing. And because if the S&P rallies, NASDAQ will rally, and then your buy signal will likely pay off somewhat. But just keep that in mind. If the S&P breaks, then and you're long this thing, be prepared to get out, right? Or tighten your stop or do something because you want to mitigate your risk in that situation. Does that make sense? Okay, good question about TXN. And that's going to go for a lot of semiconductors. I mean, let's just take a look at Taiwan Semiconductor with that TSN. I mean, just for comparison purposes. I mean, look at this, right? In comparatively, this is horrible. Okay, I mean, look at that. That's horrendous. No reason to be buying that thing, and that's the sector you're in. So, there's a lot of bearishness around in your sector. Intel, I know, looks pretty ugly too. So that one happens to be relatively strong. Okay, if you're going to place a bet on these, that's probably the one that you picked there. Texas Instruments is probably the best one to place a bet in. Does that make sense? Okay, good question. Let's move along here. Belgium. Hey, golden low from Belgium. MSTR. Let's take a look. I haven't been doing Jerry Seinfeld impressions in recent streams. I have to talk about Jerry Seinfeld. So where are we on MSTR? All right, so a similar situation. Look at this. So this is the daily chart. You have some support levels that have been established since June. It's been pulling back, obviously. MicroStrategy. Well, I mean, again, what are they? What business are they in? Are they another semiconductor? I forget. I'm familiar with them. That's what that guy. I forget his name. There's a guy who's famous with this company. Can't think of his name right now. I guess they're involved with Bitcoin stuff too, right? I probably should know that. But here's what you have with this. There's some relative strength. You have a failed low right here. That's a failed low. And you have a buy signal that's in play right now. Pin bar on Thursday, inside bar Friday. We gapped higher today, right? The actual entry was 195. So again, that's an aggressive long. These are acting relatively strong to the S&P, but again, you're fighting an environment that's not exactly friendly. So if you're expecting more than this move up here, you're asking for trouble, right? That's probably like your maximum profit potential right there. That's within reason. Otherwise, look around this area right here. If you're long, or if you're going to get long, your risk is going to be defined by 183.55. So that's a good 20 points of risk that you have to take. Okay, and this thing can turn very quickly, right? So the key to something like this, if you want to take the long, it's about making the adjustment if you get the conflicting signal. So let me just give you an example. If you put your stop at 180, let's just say you put your stop at 180 and you buy 100 shares right now at 202, okay? And your stop is at 180, you're risking $2,000 or whatever, right? And you're hoping to make at least that if this thing can get a little rally going, if the S&P can rally it by Wednesday, right? So let's say instead of continuing the rally, you get a bearish pin bar tomorrow. And on Wednesday, it takes out the low of the bearish pin bar. And you're still up, or maybe you're minus a couple of $100. Take the loss. Take the loss. At that point, there's no reason to take a $2,000 loss because you should not see a bearish signal develop after a bullish signal so quickly. Okay, this thing is just getting started and then you get a sell signal. That is how you protect yourself. That behavior, if you can get good at that, is how you make money. All right, people don't want to hear that, but it's actually being tight on your losses or preventing losses, not big wins, which is what everyone thinks. It's human nature to think that. Stop being fooled by human nature. Okay, Let me continue here. All right, hold on a second. This thing is giving me a hard time, and we will continue. All right, hold on a second here. All right, so let's move along. So that's the semiconductor, that's MSTR. What do you think about the NAS 100? All right, so Peter, I'll get to that. Let's go. Let me take a look at TradingView over here. Let me see what's going on. So I covered ZN. Visionary. Okay, just had a client get approval for 30-year 8.6. Wow, 8.6%. That's a little high, isn't it? That's kind of crazy. Okay, where's your question, Visionary? You gave me 100 coins, and I don't see your question. Old enough to remember 14. Yeah, I'm too young for that. All right, hey Ben. Let me see here from Toronto. Gold. Okay, gold. Are you talking about gold, the stock, or isn't there an ETF called gold? Let's take a look. I believe. What do you mean, Barrack Gold, or do you mean the ETF? Which one do you mean? These are all the golds we have here. So just if you can clarify on that, let me know if it's Barrack Gold. If it's Barrack Gold, it's probably going to look similar to Newmont Mining. Let's take a look. Let me just pull up Barrack Gold here. I mean, yeah, look at that. Look at that. Let's go to the weekly chart. I mean, it's breaking its lows. Okay, it's trying to hold a bit there, but I would not. There's no reason to be going long these things. Okay, maybe a long develops, but you're going to need a catalyst to keep that going, and the bonds are certainly not on your side. Okay, not yet anyway. Let me know. Let me just clarify on that one. Okay, yeah, man, that's crazy. That's a pretty crazy. Man, I hadn't realized that borrowing money was that expensive. All right. Okay, got that. I use trend-based fib. Okay. My target was beginning of the year was, and it's getting close. Okay. Well, trend-based fib, you're talking about the projections, right? Yeah, projections are very good reference points when you don't have any other reference points. They can give you good reference points, particularly for profit levels, to get out of stuff. But I would not jump in on the other side, like taking the opposite side just because it gets there, because it can blow through. Okay, seen that many times. All right, let me see. I got a few more minutes here, and then so if I missed your question, I apologize. I know we had one from Visionary. I want to answer your question, Visionary. You gave me some coins. So let's see here. All right, so I got NAS 100. Oh, Rav from Poland. All right. I used to know some Polish words. I used to work with a guy from Poland. Could you take a look at XRP? Sure, that's an interesting one. All right, I'm going to have to. So I'm going to look at NAS. I'm going to look at XRP. Oil. Can you take a look at any of asset classes that benefit from a higher dollar? Well, anything that trades against the dollar. I mean, but as far as benefit, like as in bullish, I don't know. I'd have to look around, but typically the banking sector, right, should benefit from rising rates and a stronger dollar generally. But the banking sector is also going to be affected by a weak market, so it's kind of tough, that one. But that's the one that comes to mind. Second question from Belgium. At the moment, there's a squeeze on 2-day BTC. Okay, is there any good way? All right, you're talking about the squeeze, like the John Carter thing. I find that to be, I'm familiar with it. I find that to be very random. So I would not put a lot of weight on that. Okay, you have to go by the structure, the candles. There's nothing on Bitcoin. Maybe that shows. I understand what you're saying. If you talk about the TTM squeeze, I'm not sure if that's the same thing. But basically, when the bands come together, then you're expecting an expansion, right? But there's no way to know which way that expansion is going to go if that's the case. Okay, there's no way to know. So don't be confused by that. Just let the market tell you. Okay, Michael Saylor, that's it. That's MicroStrategy. That's it. Thanks, guys. Thanks for letting me know. MSTR is a derivative of BTC. Where BTC goes, MSTR goes as well. Oh, thank you for filling me in on that. Same with Mara. So it's basically a Bitcoin stock. Okay, they're all derivatives. Okay, presumably because the companies can report one thing and do another. Right. So companies are gonna, they're gonna play with things. They have other factors that can affect the price of the stock. So, but that's interesting to know. I knew it had something to do with it, but again, I can't remember everything. Thank you. So Visionary, could you please take a look at US 10? Okay, I answered that question. Want to know what next levels? Okay. All right. So Visionary, I went over that earlier. Basically, with the bonds, we're looking at the 110s. I mean, that's what we're looking at. But it's hard with that because I'd have to do that analysis that what's his name just talking about here. Follow what that guy just said. I think it was Alex. Who was it? Someone was talking about the extension on the bonds. They were doing the fib based extension. That's a good level to go by as far. Yeah, there it is. 110. Right. So basically, like the low 110s. That's his target. I would go with that if he's using the 1618. If he's using that, basically saying it's the 2618 level. Okay, you can go with that because that's a good reference point if the right thing is measured. Okay, but that just from remembering what I know about the chart, that also makes sense. It is within range. All right, I just have to wrap this up. That's why I'm summarizing here real quick. All right, hold on a second here. Let's go on to the next. I saw there was a NASDAQ question. And there was the XRP. So let me answer those, and then I'm going to wrap this up. Okay. Hey, Chris, good to see you. Let me just see what's going on here in the chat. Risky SPX shorts. We have to be very careful. Right. If there's a failed low on the S&P, a rally can be harsh. It can be very sharp and very quick. Okay. I mean, if there's some kind of news, like if Powell says something dovish, the S&P can be up 100 points in literally a minute. I'm not exaggerating. Literally a minute, you can see the S&P up 100 points. Okay, so you don't want to get stuck on the wrong side of that move. Is SQQQ short the Nasdaq? Yes. Is it cheating? Why is it lower than? Well, the SQQQ is the leveraged. I believe it's triple leverage short. These leveraged products where it's like every 1% that the Nasdaq moves, you get 3% on the leveraged product. I mean, it's a gambling instrument, really, is what it is. So it's not really cheating. It's just they're giving you more leverage. You're getting more bang for the buck if you play it. But also, if you're wrong, of course, it's going to be more pain for the buck. All right. So just something to keep in mind. TSN is Tyson Foods. I'm sorry. Thanks, man. I'm a mess today. It's Monday. Thanks for pointing that out. What is Taiwan Semiconductor? Let me see. TSN is Tyson Food. That's the food business I was looking at. And that was looking bad. Let me see. What is Taiwan Semiconductor? Let me see. It's TSM. It looks just as bad. Okay, anyway, Kai, thank you for pointing that out. See, that's why I have people like Kai in here, making sure that I'm honest. All right. Look at that. Right on its lows. It looks horrible if you're in the semiconductors. Okay, so I covered the bond market, Visionary. So we went over that. I hope that's clear for you. And all right, so I'm going to look at the Nasdaq real quick, and then so XRP and the Nasdaq. XRP was interesting. I noticed it the other day. Okay, Ripple, and it was vertical, right? You see that? It made that high of what 56 cents. I mean, the thing basically doubled. But Bill was telling me that it was based on some favorable SEC news or whatever. So if that's the case, okay, if you're not in it, don't start thinking that this thing is going to magically turn around and now this is going to rally while the rest of the sector is not. Don't think that, okay? So in a situation like this, maybe XRP is gaining some relative strength. It's possible. But this is not a time to be looking for some kind of, we got the bottom. XRP is going to now, we're going to see a magical rally, and now it's going to go to $10 like they were all saying 2 years ago, right? Don't think that. This is a speculative coin, just like everything else. It's like a penny stock, and you're fighting the environment. So the move is notable, and it has taken out a significant resistance level, okay? Those are facts. It took out this resistance level over here. What was that? 40 cents. So if you're going to look to play XRP or get involved in this thing, let it pull back. Okay. There's plenty of opportunity for it to pull back. Look for that 40-cent area. Also look for, what is that? The lower 30s. Give the price a chance to retest those areas. Do not be impatient and think that this thing is just going to continue from here. While anything is possible, it has so much working against it that the probability is low. You have to look at the probabilities. That's not something you can see here. Probabilities are part of the context. And if you don't understand context, then you don't know how to gauge the probabilities, right? And you're just going to go literally by what you see. And charts can mislead you in that way. Look at the resistance, right? Is there any coincidence that it stopped at 56 cents? No, there's no coincidence. I mean, look at that. That's a level. So it found selling activity there, as you should be able to anticipate. And now it's giving you an inside bar. That's the weekly. So yes, it took out a resistance. If you're interested, wait for a support. But again, I'm not a big fan of swing trading something like XRP. Not a fan at all. Wait for, if you're looking for like an investment, give it a chance to pull back. And again, stay small. Only go in small bites until you see a change in the bond market. You say, oh, what do the bonds have to do with XRP? Everything, okay? Because the bond market is easy money or not easy money. We are seeing not easy money. These coins, even if there's some temporary news, they don't have any potential in them, okay? So wanted to point that out. So good question there. And let me do the NASDAQ. Okay, so we got NSX. Oh, hold on here. NSX USD. Now, this is going to be the same story. I went over this briefly earlier. This is the same story as the S&P, like I said before. All right, you have the inside bar. Look at the pin bar that closed today. This thing is closed now officially. That's not exactly the definition of a bearish pin bar, but it is one. It's not in a bearish location, though. That's also an inside bar. Okay, so we take out that low. Today's low is, what is that, 194 is today's low. So if it takes that out, basically you're seeing, if you're seeing 11 even, what is that? Yeah, 194. If this thing starts pushing that tomorrow, you have a new sell signal on your hands. So any stocks that are very sensitive to the NASDAQ, Apple, okay, Google, Amazon, Microsoft, okay, the NASDAQ 100, they're most likely going to start pushing lows as well. Again, just like the S&P, this is it's in a very vulnerable location for a squeeze. There's just no reason. There's nothing here that says that this market wants to squeeze at this time. It can change tomorrow. It can change on Wednesday. So you have your levels, right? The break of this low is your sell signal. The break of this high is a buy signal, right? 475. So basically 11,500, that gets taken out. You have a swing trade long on your hands, and you should see the same thing in the S&P. All right, and you may see a few days of rally if it can produce that. It may stop earlier, though, because we're not in a bullish environment. So don't get, just because we get an aggressive long, again, understand the limitations and factor that into your decision making. You have to do that. If you are unrealistic and think, oh yeah, well, I got the bottom of the market, you are asking for trouble. You're fighting the Fed. Don't fight the Fed. All right, so that's your scenario. Those are your scenarios with the NASDAQ, and these are going to affect tech stocks, primarily, right? Like Taiwan Semiconductor, all right, which is sitting on its lows. These things are poised to go lower. If you take the short, like I said, be extremely careful of the fake out. And if you see the fake out, don't just sit there and look at it and say, well, let me give it a chance. There's no chance. If you get that fake out, you should not see a fake out on the break of low. When selling activity unfolds, it usually unfolds quickly. And it follows through. If there's hesitation, then that's not real selling activity, okay? And you may get stuck in that squeeze. And that's what I'm trying to help people avoid here. So understand, it could be an opportunity. It's aggressive. You have to babysit, okay? That's the swing trade time frame. All right, anyway. All right, guys. So I've been at this an hour. I got to wrap this up. I really appreciate all you being here. If I missed your question, I really apologize, but I have to keep this at an hour. You can find me. You can send me an email. You know where to find me. You can send me a message on whatever, and I'll be happy to answer your question, or just come back next Monday, and I'll be happy to answer your question there, here as well. All right. So again, thank you all for taking some time with me here today. I hope you found value. I hope you got something out of this stream. I mean, that's the whole idea. I want you guys to come out of here confident and not confused. So you should have some idea of what to expect over the next few days across all these markets that we've covered. Okay. So hey, everyone, again, thank you all for being here. Enjoy the rest of your day, or enjoy the rest of your day, or the rest of your evening, wherever you are in the world. And thank you so much for watching.